I'm Alexandra Leanhard with Elliott Wave TV, and I've got Steve Craig on the phone with me today. Steve is Elliott Wave International's Chief Energy Analyst, and he's joined me to get his recent take on market action in crude oil. Steve, now I know from reading some of your analysis earlier this year that you were forecasting an end to crude's sharp decline and then for a substantial price recovery from there. And in looking at the charts, it certainly seems to have played out that way. With crude recently having given up over half of its gains in the last couple of weeks, where do you see crude oil heading next?
Let's take a look at the weekly continuation chart for crude oil. You can see the sharp decline we had from the July 2014 peak through early 2015. This decline has all the earmarks of a third wave, and the rebound from there is three distinct legs, so this fits nicely as a fourth wave. It retraced in log scale almost a perfect 38.2% of the wave 3 decline, and from a proportional perspective, wave 4 would also have a very nice look relative to wave 2. So I think the market is on go to extend the decline in a fifth wave. At a minimum, we should come down below the March low, which was at just above $42. From a shorter term perspective, however, I think the caution flags are out. The market is reaching into oversold territory. This is the relative strength index. This is not, however, a carte blanche indication to buy a market. Whenever markets reach overbought or oversold levels, they can stay there for extended periods of time, so it's not a timing tool. But it does fit nicely with the idea that this current decline is a smaller degree fifth wave and that a bounce is due. You can also see the market is in an oversold position from the stochastics. It's an oscillator. Quite often when you dip down this low, you'll get a turn back up. But the key point is that any rebounds we get should prove corrective and lead to further decline. I think what is very telling at this juncture is the daily sentiment index. It's a poll conducted by Jake Bernstein of small traders asking their opinion of the market, and the current reading's at 8, which tells us that 92% of the traders polled by Jake are in a very bearish state of mind. They all think it's going to go lower, and when the market gets so one-sidedly bearish, puts it in a position to rebound, and I think that's what we're going to see. But again, the rebound up should be a corrective retracement and eventually lead to further declines. Interesting too is the commitment of traders report. This blue line is the large spec position. Back at the July 2014 peak, they held a record net long position. Now on the sharp break, they did liquidate, but they currently still hold about half the length they held back at the top. If they choose to liquidate further, they have a lot of selling pressure they could add to the market. So that fits too with the idea that we have a lengthy wave 5 decline ahead of us.
And looking at a potential trade opportunity in crude oil or any market for that matter, how do you know when exactly to alert subscribers to a potential trade setup?
Well, that's the beauty of Elliott Wave analysis. Whenever an Elliott Wave pattern counts as complete, an opportunity presents itself. And this is regardless of the degree of trend. So whether you're a long-term trader or in and out of the markets on a daily basis, you can find trading opportunities that fit your style of trading and risk tolerance. As an analyst at Elliott Wave, I'm constantly looking for wave patterns that count complete. And then to take it further, I'm looking for the levels that would invalidate the idea that that's a completed pattern, but just as importantly, the levels that need to break to really fit well with the idea that that is a completed pattern and that we're into the next leg. So whenever you get a 5-wave advance or decline, you're going to get a correction that should be some type of a 3-wave move. Once it's complete, the market should then rejoin the trend.
Thanks for offering these insights, Steve. I appreciate it. For anyone interested in learning more about Steve Craig's forecasts and analysis, please check out the link below. Thanks for watching Elliott Wave TV.